Welcome to this Bobsguide and ACI webinar entitled How Are Faster Payments Impacting Digital Banking? I'm David Beach, reporter on Bobsguide and today's host. Before we get started and we introduce the panel, a few housekeeping rules. In front of you, you will see a question box where you, the audience, can submit questions as and when they occur to you for our panel to answer at the end of this webinar. Likewise, we will also be conducting polls throughout to get a general gauge of how the Bobsguide audience feels about the current market. If you can't stay for the whole thing or would like to refer this webinar to a colleague or a friend, this session will be recorded and available on demand via the same link you used to register. Without further ado, I'll now ask our panel to introduce themselves. Kevin, you have 30 seconds to introduce yourself.
Good afternoon, everyone. My name is Kevin Patton. I am a Director of Solution Consulting at ACI Worldwide, covering our digital channels, APIs, as well as real-time payments, based out of Charlotte, North Carolina.
Fantastic. And George, who are you?
Thank you, David. Yeah, I'm pleased to be here with Kevin today. My name is George Throckmorton. I have a pretty long career in financial services technology, working at top 25 financial institutions in the United States, organizations like Fiserv and actually ACI Worldwide. My current role is with NACHA, the ACH folks here in the United States, where I serve as managing director. And my job there is really around network development, innovation, and strategic initiatives.
Fantastic, thank you. So what's on the agenda today? What can you expect? You'll walk away from today's discussion understanding, hopefully, a lot more about the latest trends in real-time payments and digital banking. Additionally, we will be exploring the need for payments modernization that will lead to the development of payment hubs and the use of APIs as a way to generate new revenue streams. First things first, let's start with a poll. This is just a quick poll to gauge where you all currently are with your real-time and digital banking strategy. So the question is, when will you be introducing technology for your real-time digital banking payment strategy? And the answers are, we already have it. We are scoping requirements to begin now. We will begin the project in the next 6 months. We will start in 12 months. We aren't planning to do this for the foreseeable future. We'll give you 10 seconds to vote. Okay, so some pretty interesting results. There's 29.7%, we already have it. 16.2%, we are scoping requirements to begin now. 10.8%, we will begin the project in the next 6 months. And another 29.7%, we aren't planning to do this for the foreseeable future. Kevin, if I could start with you, any surprises there?
The first thing is that 28% of you guys already have it, but you're still on this webinar, so we should probably defer to you guys to lead the webinar. The fact that 31% don't yet have a plan for the foreseeable future, considering where things, how quickly things are moving in this space, hopefully after this webinar, you guys will generate some excitement internally, and we'll change that, and you'll fall into that category of starting something in the next 12 months.
George, anything to add to that?
Yeah, I think for me, as Kevin talked about, pretty much what I would expect as well. I think with any initiative like this in the financial services industry, this is a big thing, right? So I think you have a lot of folks that are early adopters, and we're seeing those there. I think in the middle of the slide, you see the fast followers. And then probably that last category, it's not that they would say they're never going to implement such a solution, but the kind of the attitude of, let me wait and see how things play out and then determine what's the best direction for my organization.
Fantastic. Well, let's actually go back to basics here. You know, what is real-time payments? What are faster payments? So Kevin, can you provide us with a general definition of real-time payments and what real-time offers?
Yes. So a couple of things that are really important as we start to think about real-time payments or faster payments, as they have many names depending on where you are around the globe and even here in the U.S. Typically when we think about real-time payments, it's 24/7 by 365. It is there is no downtime. It is real-time availability with very rapid round-trip transaction times. And each of the different schemes have different benchmarks for how quickly that round-trip transaction has to occur, but certainly the 24/7 by 365 is critical to all the real-time payment systems. Certainly, in most of these payment schemes, it really is the instant movement of funds. So you have instant availability, instant access. So you're able to have a much more clearer picture into your cash position at any time throughout the day. We spend a lot of time in these real-time payment systems also focusing on straight-through processing and automating the entire end-to-end. So if you can think about a scenario where you're trying to have a transaction go from the initiating bank through the processing system to the receiving bank, that entire round trip in, let's be generous and say less than 15 seconds, you have to have straight-through processing. So we have to automate things that in many ways today require manual intervention. The next piece here that almost every one of these real-time payment schemes are adopting are the ISO 20022 standards, as well as APIs for the exchange of data, exchange of communication. And we'll talk about this next one a little bit more, is just all the different real-time payment schemes around the globe. Initially, each and every one of these is focused on domestic, so inside of their borders transactions. But what we're starting to see is some of these real-time payment schemes around the globe starting to expand and looking at broader initiatives to go beyond just their internal borders. And then the final thing that we're seeing is that a lot of focus was initially focused on the consumer or the retail side and being able to make P2P payments, if you will. But with some of the recent initiatives from both NACHA and the Clearinghouse, we're really starting to see a major focus, a major push into the corporate space, and that what we're finding is that really the needs and ultimately the expectations are consistent across both spaces. So where we've traditionally in the banking world thought about the retail side of the bank or the wholesale side of the bank and the silos that exist, real-time payments really is forcing those silos to come down and look at real-time payments across the entire spectrum and being able to have a single solution as opposed to implementing more and more retail solutions versus wholesale solutions. It's a payment solution. So what these are kind of the things. If I go back to the basics, as David said, what are the key tenets of real-time payments? This is what we're seeing in the marketplace.
Absolutely. Thanks very much, Kevin. George, so up there on the slide it says faster/real-time. How exactly does that vary for faster payments, George?
Yeah, I think for me, David, thinking about faster versus real time, I think in general, I think of all of these schemes as being faster. Whether, it's a real-time payment scheme that we're talking about and the attributes that Kevin described, whether it's a card solution that's out there or one that's based on ACH. So they're all moving payments faster. They're trying to move that payment information faster as well. And, as to Kevin's point, there's a lot of need for automation along the way. So the one thing I would also say that's maybe not on the slide, I don't think, but one thing that I commonly hear about these types of solutions is the finality. So that's of interest in the corporate community, the finality of a payment versus, can it be pulled back? Can it be returned? What about exceptions? Those kind of things. I think that's something that we see common across any rail or any solution that's out there, is there's some finality to that payment.
Absolutely. So, Kevin, you mentioned sort of the global schemes already adopting real-time, and ACI is heavily involved in multiple schemes, the US, Europe, Malaysia, Australia, Singapore, and the UK's faster payment scheme. What lessons can be learned from other markets that have implemented real-time payments already?
Great question, David. I think that the key is one of the benefits for the United States being a little late to the game, if you will, is that a lot of the lessons learned we can take and we can apply those here. So while in the U.S., it's not mandated, so that's one of the big differences, is that in almost every country, the governing bodies are mandating this new set of rails. The interesting thing here in the U.S. is that it's being driven by market forces. So I think what we can look at is in the other regions where it was mandated that we have these new sets of rails, but they still had to, in each of these different geographies, had to find the right strategy for how to approach the market. So I think a lot of times when we look at this in the U.S. and there's some hesitancy, we think about, well, is this going to cannibalize my ACH revenue or my wire revenue or my card revenue? I think one of the biggest lessons learned we've seen from these other markets is that it's not really cannibalizing your already electronic payments schemes, ACH and wire. We're really using it as a way to eliminate cash transactions, certainly in the P2P space, and in the corporate space as a way to eliminate check transactions. So probably the biggest lessons learned is that we're not going to see exponential volume growth in year one, that it is going to grow at a steady pace. But if you look at what the clearinghouse and Zelle have already done as far as the banks that they've signed up and the number of customers they have, I think that by 2019, you'll start to see some significant volumes in the real-time payment space in the U.S.
Absolutely, and we'll get to Zelle and TCH in just a little bit. You mentioned how they strategize around approaching their various markets. George, how can these lessons be implemented in the US, and what timescale is realistic, do you think?
Yeah, I think it's a great observation, the U.S. market versus other geographies, mandate versus a market-driven adoption. And I think some of the things that we can also take away from some of the issues that other geographies have had, or some things that are unique to the U.S., is really around two areas. I think one, thinking about adoption and when these things can be implemented, I think interoperability is key, right? We've already heard from Kevin today talking about multiple solutions. So I think interoperability is key for mass adoption. The other thing I think is standardization. One of the things we've seen is that mandate or not, the mandate can be what the outcome is to be, but it doesn't really dictate how to get there. And I think standardization is key. As far as a time frame or time scale, I think what we have seen at NACHA in adoption of faster payments or ACH faster payments is that adoption is very promising for NACHA and for ACH and for the U.S. as well, because we have seen that early interest. But I think it's use case focused. I think you have to apply it to what really matters to end users and not just kind of throw it out there. I know that that Kevin mentioned P2P, certainly a good use case. Looking at some of the other ones we'll talk about today for corporates, I think that is really what's going to drive the timeline for adoption.
Absolutely. So the appetite essentially comes down to the value proposition of corporates. So what is that value proposition for corporates for faster real-time payments? Kevin, let's go to you first. Do corporates necessarily understand the value of real-time?
I think what we're starting to see in my discussions with our customers and prospects is that at this point the bankers are in many cases educating their customers on the value proposition. You're seeing a significant amount of marketing on the Zelle, on the P2P side of things, so there's starting to become a bit of a buzz in the industry, if you will, around the overall real-time payments. But I think that where a lot of the banks are looking as how do they monetize this investment? How do they monetize this excitement? And I think that there's really two things that we come at on this slide that I think are interesting, and it's not just a U.S. survey, but it's a European and U.S. survey. And the first thing is that, and this was targeted specifically at small businesses who I think generally we believe small businesses may be the first to adopt because they have more consumer-like behavior than a large corporate. But interesting in this survey that in the U.S., 65% of the small businesses surveyed said they would actually consider switching bank providers if their current bank isn't providing real-time payment solutions to a bank that does. And on the right side, 38% of the small businesses say that real-time payments will be essential to the success of their business. So I think that what we're starting to see is the interest level and the recognition that it is valuable to their business to be able to manage their business in this real-time world. And when you think about a typical small business, they didn't get into whatever field it is so that they could manage payments or so that they could monitor their banking relationships. So these folks are passionate about the businesses that they've entered, and being able to operate in a real-time world, and now you have real-time payments, just makes that their finance, accounting, cash forecasting, payables and receivables much more simple and straightforward, so they're not having to spend the vast majority of their time doing banking activities.
Thank you. George, would you have anything to add to that, perhaps from the NACHA perspective?
I think the small business analogy makes sense. I think you see a little bit slower understanding maybe for larger corporates who have a lot of infrastructure to support a complicated treasury solution, and so for them, I think we go back and again we kind of go back to these use cases where maybe they don't see the value or understand how that can be implemented across the organization from an enterprise perspective. But certainly they can understand via use case, and I think that's been the experience of NACHA, is we've seen that corporates can understand the value. The same-day ACH is a premium product that's offered to them from financial institutions, and so when that makes sense, they are in fact using that payment option, and we'll have some more information about that when we look at some of the statistics from NACHA. But I would agree with Kevin on small business and think maybe a little bit more complicated, which makes sense for the larger corporates.
Thank you. So, you know, what are the pros and cons of different rails when we're talking B2B payments? Kevin, I feel if we're going to answer this question, we're going to have to address Zelle and TCH. What do you think?
Yeah, so what we have here is just a high level of what the three different approaches are, and George can certainly speak much more details on NACHA and the same-day settlement initiatives. As far as the clearinghouse versus Zelle, interesting that many of the owner banks of the clearinghouse are also owner banks of Zelle. I think Zelle, if you look at Zelle's initial focus really comes at it from a P2P or a consumer focus, whereas the clearinghouse is initially started to come at real-time payments from a B2B perspective, but both clearinghouse and Zelle are moving towards the ability to offer business to business, business to consumer, consumer to business. So the clearinghouse, basically they instituted a new set of rails powered by VocaLink as the central infrastructure. And the member banks are part of that, and are of those owner banks, 25 are expected to be live by the end of the year. Many of those as receive only, but live and running. Zelle, on the other hand, has been up and running for some time. They leverage the Clear Exchange social token directory to avoid the need to pass between two consumers their banking account information. I can simply use my mobile phone number or an email address. I think over time, Clearinghouse will kind of head in that direction as well. So the interesting thing as these two schemes for real-time payments kind of evolve, and it will be to see back to George's earlier point. Do we have interoperability between them, and are we able to as a bank be able to leverage both networks? And as a consumer or a business, do we get to the point where I don't really care about whether the rails are going, whether this payment is going across the Zelle or the clearinghouse rails? I just know I need to make an immediate payment. And so as we evolve, it'll be interesting to see where that side of the evolution progresses.
Absolutely, and let's go to George to talk about the NACHA same-day settlement initiative. George, tell us a bit about it.
Yeah, I think at the top of the page there is NACHA. I think same-day payments or same-day settlement is still evolving. Rule changes are continuing to enhance that system, and we'll talk about that later in the presentation. You see there, you can move money. I think some of the things are within that same day or within hours within that day. I think when it comes for B2B, a couple things that are not there is, one, it's ubiquitous today. There's not 10 people, there's not 15, there's not large bank, small bank. You can send same-day payment, debit or credit, any account in the United States. So I think that's an important distinction. It has been implemented now for, I believe it's over a year or right at a year, coming to September for the final process of that. So it has been implemented, has been adopted by financial institutions and end users. So I think there's an advantage to ubiquity, and I still think it's a value in that payment that maybe is a little bit different than the other the real-time rails. I think the other part, when it comes strictly to B2B, it's all about remittance, right? It's all about the payment that goes, the information that goes with the payment. For a P2P payment, not that important, right? Whether it's for the example we always used to use for, settling up on lunch or coffee or whatever that case may be, or even in a bill payment solution, not as important as a true B2B. Accounts receivable, accounts payable, order to cash, procure to pay, all those processes that are followed, information is key. And I think what we still kind of leverage for the ACH network, and this is not just in the U.S., this is globally, it has a huge capacity to deliver that information, and now just do it quicker. So I think that's resonated, and we've seen that from the adoption statistics we have, and I think that'll continue to be a focus for corporates.
Absolutely. I think we've heard quite a few pros. I thought maybe, Kevin, you could just sort of outline some of the risks associated with faster, more immediate payments.
Yeah, I think as I mentioned early on, the focus on straight through processing, one of the key elements to that is you have to, in real time, be able to do all of your security, your validation, your risk assessment as in less than milliseconds. So I think that if we think through a lot of how we manage risk with ACH and wire today, a lot of that is we're able to just take a wire and put it into a queue and let somebody do some research, and it's not time critical from a millisecond perspective. From in the real-time payment world, you have to have all of your systems, whether it's your risk monitoring, your liquidity management, all of these things have to be real-time, interconnected, and processing through these payments in matters of milliseconds. So I don't know that there's an increased risk necessarily, but with real-time payments, I think that it's the speed with which you have to address the risk has now shrunk to milliseconds. And so I think that forces the banks really to look at all of their systems and all of their processes to make sure that they're able to accommodate for any of these real-time payment scenarios, everything that goes into that risk monitoring.
George, would you agree with that summary of the risks?
Yeah, 100%. I think Kevin's spot on that the process is in place for existing payment methods, ACH, wire, even card. They work very well. So how do you make sure that you can apply those to what we're calling a real-time payment? So very important, right? And I think what we typically see in implementations is whether or not the risk is real or not, it's certainly perceived and a little bit unknown. So I think what you'll typically see in the first implementations of these solutions is really a kind of a low payment level. And so by having that barrier, right, where you can only process payments, I don't know, up to 10,000 or whatever the number might be, that's really, I think, a reaction to saying, let's make sure that these folks have the risk controls in place, that, this money is going out the door, there is finality with these payments. And so until we have a little bit of lesson learned, let's start there and move up. And I think around the globe, I'm certainly not the expert on every real-time payment scheme around the globe, but that seems to be the trend, right? We start off with a lower level payment limit, and then that is gradually raised up as risk is addressed.
So low-value transactions, what other factors would be driving the adoption of faster payments in your opinion, George?
So for low value, what other factors would be driving? So I definitely think, we talked about this use case, analogy where you have to apply it to actually what is the economics and the use case for that. I think both of those will continue to be a factor. I think we see some other things within NACHA specifically that I'll get to about some improvements that we can make that we think we even further the adoption. I think when we're looking at the slides that we have here on the screen, where you look a little bit into the volume overall for ACH. This is for the U.S. low value system. Really good growth. I think we're looking at 2018, almost 7% growth in the network. So strong growth. I think strong interest still, obviously, that we've seen in the ACH network, and particularly a growth in B2B payments that's making up for a large portion of that. So the trend is very promising. And when we look at same-day ACH, this graph is kind of related as well to its implementation. So first of all, it was only implemented with debits. Funds availability was improved along this implementation time frame from first quarter of 2017 to now. But I think what's interesting is you do see that growth in both debits and credits. Debits continue to rise. We know that this is still based on the use cases we're talking about from corporates. So again, I think very promising data that NACHA is excited about and its members as we're seeing adopted the same-day solution. Same-day ACH solution, excuse me. So when we look at, where that volume is coming from, again, we're talking about, ubiquitous volume, and everyone has to receive, but it is optional to originate, obviously, a same-day ACH payment. Clearly, there's a lot of interest in B2B, and then you'll see in corporate or in consumer to business, we think that is obviously the bill pay opportunity. B2C is disbursement. And then it makes sense. P2P is smaller, whereas Kevin talked about probably seeing some pretty good growth on that on the P2P networks. And the dollars make sense as well, just like all ACH volume in general. There's more retail payments than there are corporate payments in the network, but the corporate payments make up for the majority of the dollars. And you see some pretty significant dollar levels there for the corporate payments versus a consumer like a P2P payment. So again, I think we base these on use cases. We're talking about potentially emergency payroll for a company. Certainly disbursements are a good use case for these types of payments. And then we're seeing some growth, I think, in a true B2B payment. But there is some economics that come in with that. And to Kevin's point, there's a lot of things that still need to be done by corporates for true B2B processing, right? I can get a payment faster, but it doesn't mean I can do anything with it if my systems aren't capable on the receipt end. And maybe I could finish with this, Dave. So we're talking about what other factors. I think these would probably factor into that conversation. So we definitely have some new rules that have been approved and are in the process of being implemented. One is even faster availability. I think Kevin alluded to this. And what is a real-time payment? It's pretty fast when you have availability. Now we're not talking about settlement. That can vary depending on the scheme, but funds availability obviously is very important to the receiver and a lot of times even to the sender of that payment, who are trying to get credit or get a discount or whatever that might be. So there is a ruling in place where we're improving availability made by receiving financial institutions. We talked about this dollar limit. It was originally set at 10, and I think for a B2B applicability, certainly that was too low. So $100,000 will be the new transaction limit. It is per transaction, and we think that will increase adoption by corporates. And then a third ACH processing window just basically is closing this window. How quickly I can move money, within a day is really coming down to what is insignificant for corporates, going to within hours instead of next day or the following day. And this also will help out West Coast versus East Coast. In other geographies, and our research has told us this is an issue as well, with just time zones and when hours of operation are going. I think, David, that Kevin made a comment early on about, real time being always on, always available. Certainly with some of the other systems, that's not the case. It's not open, 7 days a week. And so we continue to look at those possibilities as well. So you see some of the effective dates. I think, the message there is it's not 5 years from now. It's now. Those will be implemented within next year and the year following. And I think that's moving pretty aggressively and pretty quickly. for an industry that moves together. Remember, all of those would be for every financial institution, every account in the U.S. Would qualify.
Let's change tack just a little bit and think about the adoption of APIs and the appetite for APIs as well. Why are APIs critical to the success of digital banking and faster payments? Now, that is a very big question. Kevin, start us off. What is an API, an application programming interface? How does it fit into existing infrastructure for cash management?
Yeah, so if we think through, and some of us here have been around for a few years, so we go back to kind of how channels have evolved. At one point, the only way to interact with your bank was to actually go into a branch, and then we had this fantastic new machine called an ATM. And then later we had with a lot of the PC home banking, so you had a nice floppy disk that you could put in your old Commodore computer, and you could do PC banking. This mysterious new thing evolved called the internet, and all these software companies and banks started trying to figure out how to provide banking services over the internet. And eventually that became commonplace, and you have banks now that are internet-only banks. There are no brick and mortar. And that evolved to mobile banking. And now I think kind of this next generation in which you're seeing in this evolution is banking as a service, or really interacting with your bank through APIs. Application programming interfaces, really being able to have a variety of different solutions, whether that's your ERP system, whether that's a cool new fintech app, or if it's just systems that you have built inside your own company, rather than being forced to go through the bank's internet banking or mobile banking, actually be able to tie the two together, really connect those applications, leveraging APIs. So where we're starting to see, and a lot of this was driven by the PSD2 regulations coming out of Europe that essentially said the bank has to provide access to data for account balances and transactions, as well as payment initiation through APIs to its customers. We're not going to see that level of regulation here in the U.S., but we will see, and we have already seen financial institutions starting to offer API-level connectivity to their customers. A number of fintechs are out there, and they're providing, whether it's a small business accounting package that needs banking information, be able to connect to their customers' banks through APIs. We're seeing a significant increase in the activity around API banking here in the U.S., even without the regulation that we saw in Europe.
Absolutely, couldn't agree more. Sorry, do go on.
So just a couple of things that if you think through kind of how customers are accessing their data today, is that it's not a connected world, right? They have their accounting packages or their payroll packages, accounts payable, and now they have to go over to the online banking system. They have to log in. They get their information and they have to re-enter it. It's not a connected approach. But with APIs, all of these systems, these disparate systems, can now be connected through APIs and no longer require the payroll clerk at the company to log into the online banking system to initiate the payroll, or the accounts payable manager no longer having to log into the banking system to initiate their vendor payments and approve those. So where we see the big opportunity for APIs really is all around connecting all these different systems. And again, as we think through the requirements around real-time payments, really having these APIs available and increasing our ability to offer straight-through processing all the way back to the systems of origin. So if you think about an accounts payable system needing to initiate a real-time payment, well, if you can do that in your ERP system, you've got that complete end-to-end connectivity from an API perspective. And then one more slide is to give some thoughts on how you as banks or as solution providers can leverage APIs as it relates to real-time payments. A couple of real-world examples that we've seen and we're able to take advantage of is whether it's leveraging this user interface for real-time payment initiation receipt, leveraging the underlying technology of APIs, or the bank leveraging APIs to develop a mobile real-time payment initiation app. Or on the customer side, with your ERP system is able to call APIs for both the real-time payment initiation as well as all the confirmations that take place. Or we're seeing in a lot of countries that have rolled out real-time payment schemes. You see an abundance of fintechs offering new and interesting takes on how to initiate real-time payments and how to provide those value-added services that George talked about. The real value is in the data. So how do we leverage all of that data? You're starting to see some really interesting ways where we're getting that data and interacting with that data through APIs rather than our traditional mechanisms of keying and rekeying and having this manual intervention at multiple steps throughout the process.
Alfred, and before we head over perhaps to sort of the new revenue streams that APIs will potentially bring, let's first go to some of the poll questions. What is your organization's view of real-time payments? Options are a revenue-generating opportunity in consumer banking, a revenue-generating opportunity in commercial banking, a revenue-generating opportunity for consumer and commercial banking, a required project to keep up with the market to be completed at minimum cost. Again, another 10 seconds. Okay, so let's have a look at the results. Okay, a pretty clear majority there for a revenue generating opportunity for consumer and commercial banking, and then a required project to keep up with the market to be completed at minimum cost. George, any surprises there?
No, I think depending on who is answering the poll, and when you think about the value of something new like this and a new service, you typically end up with the same thing, right? Clients and or bank clients, don't like to pay for a lot of things, and they want value out of that service. I think it's more to that, right? It's the economics of it, not just, can I generate revenue? What is the value I'm providing? I think Kevin went into a lot of detail in his last 3 slides on APIs. That is clearly the value of what we're providing. So it's not the fact of, you can send a different payment type. What does that really mean to the business? And what is that worth to that company? And I think there is true worth. So I think the economics will make sense, and we'll continue to shake out. Interesting to say, at a minimum cost, I think that's related to what we're hearing from the industry. Obviously, everybody wants costs to be low. I think that makes sense. But, you know, a little bit of wait and see, I think, on the final business case and how that'll play out still.
Absolutely. So perhaps maybe we for that 31.8%, maybe we should just talk a bit about the new revenue streams that Open APIs will have. George, to what extent are the likes of Zelle influencing commercial adoption?
Yeah, for me, I think when we see, you know, the rails that have emerged here in the U.S., there's definitely an interest, you know, from organizations like Zelle and those folks who really want to influence commercial adoption, right? That's where they think there is some value. And I don't disagree. I think there is value there on the corporate side. I think for me, still thinking about open APIs and how they relate and how we're doing those things, I think for one, when you think about revenue, it still should be on the product side. It shouldn't be on the rail or the format or those types of things. And what it gets me to is a conversation really, you know, around standardization, is that really provides value. So if you look at the competitors in the market who are offering the services, that they should be able to compete, and they will, on the products and services they're offering to clients. But on the API itself, right, on the actual code, on the functionality of that code, probably not. The standardization would be better, I think, and more efficient for all. It would benefit end users, you know, who could, in fact, enjoy the same automation on the same ERP platform, or different ERP platforms, or different financial institutions. I think that's the promise for those organizations. So I think that will influence adoption greatly. You know, standardization will make things easier. And so far, we've seen a lot of interest in not only the U.S. I think we've seen that with PSD2, and in other geographies have said we've come to that conclusion that we either can't meet the mandate without standardizing, or even if we do, it's going to be at such an ineffective way from a cost perspective, that's not going to make sense. So I think that's where we're seeing organizations come together through interoperability and through standardization, and that's really where I think you'll see mass adoption.
Kevin, very quickly, as I'm aware that we're sort of running out of time a little bit, what does this mean for corporate digital channels?
Yeah, I think it really is. The digital channels really are, if you think through it in this real-time payment world, whether it's online, mobile, APIs, that's the mechanism that your corporate customers are interacting with the bank. And so that's how their expectations are, that those digital channels are fully integrated with your real-time payment processing engines in the back end that are fully integrated with Zelle, Clearinghouse, NACHA. So I think that when you know, in a lot of scenarios, we think about it from the rails frontward, as opposed to saying, hey guys, the front end of all of these payments really is in your digital channel. So you know, we've got some research here, and not to read everything on the thing, but I think that you know, 64% of the banks believe that real-time payments will enhance their ability to service their customers. 68% of the banks are enhancing their online payment capabilities. So it really is. It's an opportunity to address this evolving market, to take that opportunity to address your overall digital channel solutions, because many banks haven't significantly invested in those digital channel solutions in the past years. This can be the catalyst. This can be the driver for investing in those digital channel solutions as well.
Absolutely. I think, George, you touched on it briefly, the API standardization, the discussion around it. I was recently speaking to Julian Soyes, the Chief Commercial Officer of Challenger Bank in the UK, Starling. They're offering a payment as a service sponsorship into the faster payment scheme here via an API, and the packaging up into a fantastic solution, although I shouldn't be biased. What learnings can we take from that sort of standardization in the UK, if any?
Yeah, I think that's the model. David, for me, again, when we go back to standardization, and even to Kevin's comments, right, about backing out from the rail, let's look at the end user experience, and we start from there. And you start from an ERP provider who says, I'm going to build an API capability within my product that is adopted by my users. And again, we should be, very descriptive on what we're talking about. When we say these functionalities are built in, a few slides ago, Kevin was talking about, how these things work in the real world environment, how a corporate now interacted with the bank. We're not talking about new processes. We're talking about elimination or automation of existing things. When you have an API-enabled product, there's no button to press, right? There's no remembering to do this, or I have to take an extra step. It is doing it automatically. It's system-to-system, if you will, messaging that says these things are occurring all the time as I'm working. I'm just doing my normal process. So I think that is a real value for what we hear from corporations. So I think that is the key, right? API enablement, more likely standardized API enablement, right? An ERP provider saying, I now have an API and I would like others to use it. That's great, right? If I'm the financial institution and I say, well, why don't I connect using that API? Again, a good thing for that bank, for that ERP customers, but to repeat that over and over, maybe it's a little different in Europe where there are fewer financial institutions, but in the U.S., that's tough, right? To say, well, how do I expand that out to 10,000 banks and credit unions? That's not as easy, and I think that's where standardization comes into play.
Absolutely. So Kevin, considering that ACI supports most of the providers for faster payments in the UK, what is ACI's view? What are you hearing from your customers?
Yeah, I think we're certainly seeing a ton of interest in this space. Where I just popped up the slide with the different use cases. I think this is a small sampling. There's every single day we're seeing new and different ways of addressing this market and the real-time payments. I think the next thing that is really it's looking at this whole digital channels from a digital first perspective. So coming at it from how am I going to drive a better user experience? How am I going to provide better interactions for my customers? And ultimately, we're seeing this, if you will, this convergence where the old ways of doing things are going away, and it really is real-time everything, real-time payments, APIs to really support that digital transformation. So we're seeing significant interest across the board in that. And just as a perspective on that, kind of what that end-to-end transformation can look like is starting on the front end here with your digital channels and APIs, going through your solution. Our digital channel solution is called Universal Online Banker, through the real-time payment solution that handles all the clearing and settlement and a lot of the straight-through processing things that we've talked to ultimately provide this connectivity to all these different real-time payment schemes around the globe, so that ultimately, as a bank, as you choose to enter into these new markets, you're able to have this complete end-to-end view on the real-time payments landscape. So that's kind of our perspective, and where we really see this going is truly taking an end-to-end approach as opposed to one or the other.
Absolutely. So are we seeing, with the adoption of real-time payments, are we seeing entirely new revenue streams, new product offerings coming into play? I'm thinking request to pay, potentially. George?
Yeah. Yeah. Oh, sorry.
Yeah,
I was going to. Sorry. Go ahead, George.
Yeah, I think, request for pay is one example. I think it started off as, and we had it earlier in the presentation today, request for pay is really an option when you can't support a debit model or you choose not to support debit. We're not going to talk about risk and those things today. We don't have time to delve into that. But I think looking at that, what request for pay actually is an opportunity to send a real-time invoice. I mean, that's what it is. So I think around real-time invoicing and remittance, there are opportunities. I think that when we look at remittance processing today, it is very, very heavily email and very, very heavily paper. And so both of those options require a lot of reassociation. Now, there's a lot of products being built, artificial intelligence products and those things, and they work very well, but it doesn't mean they don't come with a cost each time you're processing one of these. So I think there are opportunities like that will be out there.
Fantastic. And I think we're getting near the end. So we're going to finish on a poll just to gauge the interest that we've seen today. What would you like to discuss your real-time digital payment strategy? Immediately 2 weeks or 6 months. Please do leave your feedback. It is very, very helpful. Okay, we'll now take a little bit of time to answer a few questions that have come pouring in. If we do not get through to your questions, please do not hesitate to reach out to Xenia. You can find her email address there. Do take a note. First question is addressed to George. What is the value of a more strategic long-term commitment to payments modernization rather than just a tactical approach initially?
Yeah, David, if you wouldn't mind, repeat that question for me once.
Of course. What is the value of a more strategic long-term commitment to payments modernization rather than just a tactical approach initially?
Yeah, wow, that's an interesting question. I think, at the end of the day, when we think about tactical, if we're not looking, down the road in the future and what these use cases are going to be, how we're going to evolve, I think we set ourselves up for failure. I think, it's interesting when I look back on some of the things that we've just experienced in the industry, and you think about what's a tactical solution and let's go answer the problem or answer the opportunity. So one of those was around P2P, right, where we saw, I think the industry, we saw the churn and everyone kept saying this is something consumers want. Financial institutions wanted to play, non-financial institutions wanted to play, and so you had all of those organizations which we know, right? Solutions for P2P range from PayPal to Pop Money, and there were others that were emerging, and so we thought that was the solution, and it was very tactical in nature. We can accomplish this, but that was before the real-time conversation was happening. So I think that kind of, makes you wonder to say that were we really looking ahead and down the future, or were we just trying to respond to what we think was an industry need? I think there is value in looking long term versus spending tons of money on what we think we want to do now. And not that any of that's throwaway. I think there's always value, in lessons learned and infrastructure that can be leveraged. But I think we should have some caution in trying to be too tactical and looking at what's just in front of us.
So George, sticking with you as well. For the long-term adoption, you mentioned that standardization was a big obstacle. What, in your opinions, are the biggest challenge to get standardization?
Yeah, I think we've seen that. So me particular at NACHA, we've looked at that, particularly around APIs and interoperability. I think the kind of storyline around this, and I know, Kevin alluded to this as well. When you see adoption of that, you start off where there's no interest in standardization or interoperability. Folks are out there trying to compete, be the biggest and the best, and that's the model. But you get to a point where you have this kind of long tail that you can't convert, and it's too expensive. And that in the beginning, that was the way to go, but now, we've seen this in B2B. And I think we'll see it in other payment types as well, where it will be a change in opinion, and that interoperability is good. Standardization is something that's not going to affect competition. So we've seen early adoption of this already. NACHA formed a new organization called Affinis, whose only job is to standardize APIs. It is a part of a global initiative that we've had underway, and it started off very well. It's new, it's early on, but I think, these are signals to me that the industry is ready to embrace these concepts, unlike maybe in some of the other geographies where it was mandated. I always have to remind folks that even PSD2, there was not a mandate to standardize anything. It was a mandate for financial institutions and non-FIs to comply, but no one really said how we're going to do that. And I think, what was done was what I just described. In the beginning, everybody went and did their own thing, what they thought was the best for their clients, but they learned quickly that without this interoperability opportunity, it's just not going to work, and it's not going to be cost effective.
Absolutely. Thank you for that, George. Kevin, I like this question, so I'm going to ask you, is it possible for a company to correct their strategic approach quickly if they realize they've moved too slow? If so, how?
Yeah, I think that we've seen a lot of banks, companies kind of dip their toe in the water, if you will, on immediate payments or real-time payments or faster payments, and quickly realize, wow, we went the wrong direction. I think that the answer is, in my opinion, it's finding the right partner that can help you throughout that evolution, throughout that life cycle. And finding solution providers that offer technologies that don't necessarily require you to boil the ocean from the beginning and do every single real-time payment scheme and really allow you to move at a rapid pace and get quick wins. What we've done and what we like to see is we follow an agile methodology, so we talk about minimal viable product, MVP. Let's get something in the market, and it either and then you can evolve. You can continue to build on that. So I don't think that you're gonna make a decision that's wrong and that's going to cost you. Hopefully, you haven't made a decision that's going to cost you 5 years. Hopefully, if you've made that decision and it's the wrong decision, you decide quickly and you can shift gears. So I think from an ACI perspective, we believe we can provide financial institutions the ability to move quickly into this space, but also give them the flexibility to change direction. So if we believe the fastest way to get up and running, have a real-time payment solution offering in the marketplace is to leverage our ACI private cloud. We have our solutions, they're up and running, they're ready to connect and get rolling. But over time, as a bank, you may say, well, we're looking at a broader payments hub initiative, and we want this to go beyond real-time payments. We want this to be all payments, and we want this to be processed in our data centers, on our premises. So we can transition that to, and as a part of this evolution, you can move from, hey, I've got a real-time payments processing system that's up and running, and now I want to go to a full-blown payments hub. You don't have to start with, hey, I need a real-time payments hub. I need a payments hub that's going to process every single payment in the world, and I need to do that day one. That's a recipe for disaster. You really, I think, and what we've seen is this: take this tactical, a measured approach to get to the end state.
Absolutely. Thank you very much, Kevin and George. I'm afraid that's all we have time for. I'd like to thank the audience for the time spent with us today. I really do hope the session was as informative for you as it was for me. Today's session has been recorded. If you'd like to go back and listen to it, or likewise, you can share it with your co-workers. Please also take a moment to complete the post-survey question. And that now concludes the session. Have a wonderful afternoon. Thank you very much.